Hey everyone, welcome back to Corporate Decoder, the place where we promise to rip apart corporate documents and give you the juicy bits, and boy, do we have a juicy one today with CME Group Inc. Latest quarterly report, get ready because we are diving deep into their financial performance, looking at revenue, expenses, and what it all means for the future of trading and financial markets. Also, if you love unfiltered financial analysis, make sure you hit that subscribe button and join our growing community over on Discord, linked in the description below. Alright, let's kick things off by looking at the big picture, the balance sheet. CME Group Inc. and its subsidiaries as of the 30th of September 2025 had total assets of a whopping $446 million. That is over $187 billion. Now that is a massive number, and it mainly consists of performance bonds and guarantee fund contributions, which is essentially money held to guarantee trades. This particular line item shows $149,041.2 million. This is a huge chunk of their assets, and it reflects the enormous volume of transactions that CME Group handles and guarantees it is like a massive safety net for the entire financial system. Now, their total current assets jumped significantly to $152,800.8 million compared to $103,033.5 million. At the end of the previous year, this increase is largely driven by those performance bonds and guarantee fund contributions, which shows just how much activity has been flowing through their markets. On the other side of the coin, we see total liabilities standing at $158,954.3 million. Again, a massive figure, mainly driven by those same performance bonds and guarantee fund contributions that they hold for clearing firms, meaning a big chunk of their liabilities are actually other people's money held in trust. And finally, CME Group shareholders' equity sits at a healthy $28,190.3 million after growing from $26,486.9 million. This means the owner's stake in the company has grown, which is generally a good sign, indicating the company is retaining earnings and growing its value. Now, onto the engine of the company, the income statement. Overall revenues for the third quarter ended the 30th of September were $1,537.6 million, a slight decrease of about 3% from the previous year. That might sound like a dip, but let's dig deeper. Clearing and transaction fees, the bread and butter of CME, dropped by 5% to $1,227.9 million in the third quarter. This is interesting because it suggests a slight slowdown in trading activity on their platforms compared to the same time last year. However, market data and information services revenue saw a solid jump of 14% to $202.5 million. This shows that even if trading volume dipped a bit, the demand for valuable market insights is growing, which is a positive sign for diversification. For the first 9 months of the year, however, total revenues showed a healthy increase of 6%, reaching $4,871.9 million. So while the third quarter had a slight dip, the year-to-date picture is stronger. Expenses are also up slightly by about 1% to $565.0 million for the quarter, and by 3% to $1,662.0 million for the 9 months. This controlled increase in expenses alongside revenue growth paints a picture of careful financial management. Because of these movements, operating income for the quarter was $972.6 million, a slight dip from $1,024.2 million last year. But for the 9-month period, operating income grew nicely to $3,209.9 million from $2,984.4 million. This again shows a stronger year-to-date performance. Now here is where things get really interesting. Operating income, or rather the lack thereof, is what makes CME Group's income statement so unique. Investment income for the quarter surged by 51% to a massive $1,548.7 million. This is largely due to earnings on their reinvested performance bonds and guarantee fund contributions. This is not typical investment income. This is money earned on the collateral they hold for trades, and it is growing because of higher trading volumes and how they reinvest it. On the flip side, other non-operating expense also increased significantly by 52% to $1,396.6 million for the quarter. This is mainly because they distributed more of the interest earned on those performance bond collateral reinvestments back to the clearing firms. This is a direct pass through of earnings from the collateral management business. Looking at the statement of equity, we see how shareholder value has been built up. This particularly highlights the share repurchase program, which allows the company to buy back its own stock. The report mentions that in the third quarter and 9 months ended the 30th of September 2025, they repurchased about 32,265 shares of their class, a common stock, at an average price of $253.05. Per share, this is about $8.2 million in repurchases. While it seems small in the grand scheme of things, it signals a commitment to returning value to shareholders. Let's talk about what drives CME Group trading volume. The report details average daily volume by product line for the quarter ended the 30th of September, the aggregate. Average daily volume was 25,322,000 contracts, a decrease of 10% from the previous year. This correlates with that slight dip in clearing and transact. Yian fees, we saw earlier. Interest rate products, a major driver for CME, saw a 10% decrease in volume for the quarter, but a 5% increase for the 9-month period. This reflects the uncertainty and then subsequent settling of the market around interest rate policy and inflation data that we saw earlier in the year. Equity indexes were down 15% for the quarter, but up 4% for the 9-month period, reflecting the broader market sentiment around global tensions and trade policy impacts. Interestingly, Bitcoin futures and options saw a significant jump of 45% for the quarter and a whopping 72% increase for the 9-month period. This highlights the growing role of crypto in the derivative markets and CME's increasing presence there. Ether futures and options also saw a massive increase, even if the absolute numbers are smaller, demonstrating the push into digital assets. On the FX front, eBay's foreign exchange transaction fees were down 13% for the quarter, but up 4% for the 9-month period, showing a slight cooling but continued underlying activity. What is fascinating is that the average rate per contract actually increased by 5% for the quarter and 1% for the 9-month period. This means that even with slightly lower volume, they were able to charge a bit more per contract. This was partly due to a fee structure increase that went into effect on the 1st of February 2025, and also a shift in the product mix towards higher value contracts like commodities and metals. In the cash markets business BrokerTech, fixed income transaction fees were up 18% for the quarter. This is a positive sign, showing growth in their fixed income trading platforms. The average daily notional value for US repo, a key indicator, in the fixed income space exploded by 28% for the quarter. This surge is attributed to higher US debt issuances, following the debt ceiling increase earlier in the year, showing CME's crucial role in facilitating these massive market movements. Now let's look at expenses. Compensation and benefits increased by 9% for the quarter and 6% for the 9 months. This rise is attributed to salary increases implemented early in the year and an expansion of their workforce, particularly in international locations. Technology expenses also increased by 7% for the quarter and 9% for the 9 months. This is largely due to higher software fees and third-party services linked to their ongoing Google Cloud transformation project, which is a significant strategic investment. Interestingly, professional fees and outside services actually went down by 19% for the quarter, but only 4% for the 9-month period. This is largely due to a shift in focus in their Google Cloud project, moving from broad consulting to a more targeted migration phase. You will notice an increase in legal fees by 19% for the quarter. This is directly linked to the class action lawsuit litigation they faced, which highlights the legal challenges that large financial institutions often navigate. The non-operating section of the income statement is where CME Group truly shines. Investment income surged 51% for the quarter, largely driven by those reinvested performance bonds and guarantee fund contributions. Remember, this is not passive investment income. This is active earnings on the massive collateral they manage. The other non-operating expense also increased by 52% for the quarter. This mirrors the higher earnings from collateral reinvestment, as they pass a larger portion of that interest back to their clients, a key part of their business model. Their effective tax rate remained stable at around 22.9% for the quarter and 23% for the 9 months, indicating consistent tax management. Despite the slight dip in quarterly revenue, net income for the quarter was $908 million, a very minor decrease from $912.8 million last year. However, for the 9-month period, net income saw a robust increase of 9% to $2,889.3 million. This shows strong underlying profitability for the year. And for the shareholders, this translates to diluted earnings per common share of $2.49 for the quarter, a very slight decrease from $2.50 last year, but a solid 9% increase to $7.92 for the first 9 months of the year. Cash flow from operations is up a healthy 18% for the 9-month period to $3,143.2 million. This is a strong indicator of the company's ability to generate cash from its core business activities, even with revenue fluctuations quarter to quarter. Now, for my take on CME Group based on this report. CME Group is a titan in the financial world. Their ability to generate income from managing massive amounts of collateral is truly unique, and frankly a huge competitive advantage. While quarterly revenue might show minor dips, the underlying strength and the growth in market data and the incredible rise in crypto volume indicate a company that is adapting and thriving. The slight decrease in clearing and transaction fees for the quarter is worth noting and could signal some market cooling or a shift in trading strategies. But the overall year-to-date numbers are strong. The increased legal fees are a reminder of the risks inherent in such a high stakes industry, but the company appears to be managing these challenges. The significant investment in technology, particularly their Google Cloud transformation, alongside their growth in digital assets like Bitcoin and Ether, shows a clear strategy to stay ahead of the curve. The core business of facilitating and clearing trades remains incredibly robust, and their diversification into market data and their growing crypto offerings are smart moves. Overall, CME Group demonstrates a resilient business model with multiple revenue streams and a clear focus on innovation and market leadership. They are a systemically important player, and their financial health is a barometer for the broader financial markets. Alright, that is our deep dive into CME Group Inc.'s latest C-filing. What are your thoughts on these numbers? Do you see the increased crypto volumes as a major win? And how do you feel about the company's dominant position in the market? Let us know in the comments below. If you found this analysis insightful, please give this video a thumbs up and subscribe for more from Corporate Decoder. And do not forget to join our growing community on Discord, linked right there in the description. Thanks for watching, and we will see you in the next one.